Alright, welcome to the blog for Monday 30th of July, first day of the new week. So this is day 36 of 65, so the start of the 8th week of this 13-week or 3-month compound effect challenge, making forward progress every day and applying my edge and method, and just making sure all the little things are done right, just sticking to the method, applying the edge day in, day out, be doing the same thing and just moving ahead with absolute confidence, belief, results, information, and just really applying this compound effect. Is the trading plan looking at these three major strategies, really as far as each of these strategies, recording a lot of information and tabulating data based on each of these areas. So under each strategy there's 2 trades, but looking at these as individual strategies and getting some great information on those. So strategy 1 is just all about continuing trends. So either 5-minute continuation, 5-minute momentum. You get the trend come back, a bit like a 5-minute buy, 5-minute sell situation, and basing on key levels in the market. So only ever buying or selling if there's significant areas in the market. So what I'm looking for is a buying formation or a selling formation, or let's say a buying formation over the top of an area where buyers are likely to hang around because we're hitting support areas. Strategy 2, breaking the highs and the lows. So same sort of idea. Doesn't necessarily have to be a key level, so an area that's based on multiple days, but just a significant price area, meaning over the last half an hour or so prices dealt around the specific figure. I'm looking for some, that area to be broken, and then I guess come back and test it, and that's where you buy to break the highs or sell to break the lows. And of course confirmation is the other markets going with it and looking to break as well. There's an example of that today, even though it didn't work, still a good example of it. And then the third strategy, it's a pivot strategy. So the fundamental area or the key area is that a pivot has been set. For example, going up, come back, look to head up, so that leaves a significant swing low point. All of a sudden the upside fails and comes back at that low point, or that swing low point, and once it breaks that point, all of a sudden there's a change momentum. But really has to be an area that looked like it was going to go on with the previous area. All of a sudden everything fails and starts to change direction, and when you get that real change or that pivot area in the market, that's when there's real pressure and it just tends to go. And it's an area that's working really well for me. It's probably over the strategy, it's the one I'm most confident with. And of course other markets also applied to the area, meaning you can have a pivot, but if just the ES is approaching it and all the other markets are kind of hanging off it, then it hasn't got that strength. But if you see the ES approaching it and other markets are already well and truly pushing through that area, get on that because it's breaking. Righto, so first trend of the day, always looking at the first level within the market. Looking for the upside, had a key level just sitting here at just about at this 80-50 level. Looking for the market to pop up and come back and get it. But unfortunately the market, when it did eventually come back by then, but it's a bit extended and really looking to catch it early. Just reassessing this first breakout area. It's certainly an area that works really well, but it's an area what I want to do with it is create a when you look at exits and entries and returns on investment, I think it's an area when you get this one right, it's potential to really go. Most times when you pick the direction, it really doesn't go at least 3, 4, 5 points. It's one where I want to for a 1-point risk, look to, when you do get it, take it for 4 or 5 points. So obviously the strike rate will start to decrease, but really start to increase the expectancy just on this particular setup, because that's the area and that's how it suits this particular area. So that particular one, looking for it there, but just didn't eventuate. From there the market's pushed up. As we're coming back here, of course, if the market started stalling around these support areas around here and starts to head up, looking for the break up. But again, looking at the other markets, it's quite significant. As the market was coming down here, the Nasdaq, the Russell, all those ones were already at their lows, so significantly lower, and really showing some momentum on the downside. So it was, as we're approaching coming down here and getting some momentum on the downside, certainly keen for some sort of selling opportunity. The market popped up here, just this area here, and there was definitely some nice resistance at 83.50 just wasn't a key level for me, so I wasn't going to jump in and go against my system. But this was the area where it really looked like it was going to come back, and with other markets, it was certainly a fantastic opportunity to sell from there, but just not a key level there. Did come down to a key level here, didn't pop back and touch that one. Eventually did push through this level here, so still the trend's got momentum, looking for it to pop back. So this is my 5-minute momentum trade, or a bit like a 5-minute fade. Get through, so push at least 6 to 8 ticks, so only 6 if there is momentum, so in this case there's definitely momentum, so not needing to go the full 8. So at least 6 ticks. As soon as it goes 6 ticks, pop the order right on the resistance area there. Look for the market to hold that point, push lower. So this particular one, bringing in the 15-minute charts, this is probably a good opportunity to bring in the 15-minute charts. I didn't actually talk about that. And it's a fantastic one for using for exits and direction. So approaching this market, you can see this trend line, quite significant trend line, and we're sitting above it. Then all of a sudden we start getting underneath this trend line. So that's real significant. I'm finding these trend lines work really well in the 15-minute charts. And you can see all day then we kind of came up and tested it, but we're remaining underneath, and that's acting as resistance. So not only do you have horizontal support and resistance, this is what I call vertical support and resistance as well. But the thing about this area here, if we're looking to, this market's trying to go up. It got up, it's all of a sudden coming back with some sort of pressure. If we get underneath this level here, there's real potential for it to pop down, say to around 1370 region. That's what I was looking for with any of these sort of sell trades. So whenever possible, most trades I'll just go for a lot of 10 ticks, but certainly when the 15-minute chart shows an area we can go for more, it might be 3, 4, 5, 6 tick points. There's the opportunity. This one here, really looking to get on this one and hold it down to 1372. So it's one of those ones that was about a 6-point play looking for there. In the end, it's got to break even. It went 8 ticks exactly, and then it's popped back up, and from there it's a break even trade. So another trade here also. So this one here, so obviously these arrows, just to point out the day, these arrows are opportunities, not necessarily trades I was very close to getting on, just opportunities I perceived in the market. Some of them just very close with no fill, or some of them just they were hanging around that the setup was coming, but it just never eventuated. But either way, I like to mark them and keep a record of it. So this particular day I had 6 setups, so you can see 1, 2, 3, 4, 5, 6. Okay, so 6 setups, 3 never eventuated, and 3 marked with these areas here are the actual trades that did eventuate. So 3 out of 6. First one here being momentum, break even. Next one here, I was still in the momentum trade at the time, so I'm not going to double up and take this one. But what I want to do is record it for my spreadsheet, and it's part of a different strategy, even though it's entry around about the same area. It's still part of the strategy, or a different strategy. So of course, even though I'm not taking, I still want to record it as a winner or a loss. And this particular one actually would have failed, but take it through it. Anyway, so here we go. We're coming down here. This is the price level identified, so we popped up, hung around it, and then we pushed 4 ticks past it, so confirmation that they're looking to break on the downside. So once it popped up, get the order there, and away it went, and it pushed down 1, 2, 3, 4, 5, 6, 7 ticks before being would have eventually been a small stop out. This particular one here would have probably taken a 4. If I had taken it live, would have been about 4 ticks stop out. Interesting thing about this, it's gone 7 ticks, and I actually want to talk about something at the end of this as far as potential to take out profit early, and I'll leave this point for the end, but keeping in mind that this one actually went 7 ticks, and I want to make a point on this at the end. So that particular one there wouldn't have worked if taken it live. Then from there we've started popping up, so this is a reversal setup. This is the one I'm really liking. So for example, whenever I've got some sort of sell setup, so in this particular case it was a breakout trade. The breakout trade actually failed, and if it fails and starts putting pressure back on the top of the range, so in this case here's this high point, as soon as it breaks that area there, looking to buy the breakout of that area and get a continuation, as long as at least one of the other markets is breaking that area. In this case all the markets were right there, and it was the Dow Jones that actually broke. So for there, took it. Once it broke, this particular one, again it went 1, 2, 3, 4, 5, 6. I think, let me just confirm that. Yeah, 6 ticks. Then came back. When I had a real rush down here and it popped up, I actually got out here for break even, and eventually, where is it? Sorry, actually, yeah. So I'd reduced my stop out. So in the end, it went 1, 2, 3, 4. So actually a full stop out would have been contained, eventually would have went the money, but that doesn't matter. The market actually came back up and left a bit of a significant swing low, so I moved my stop up to that, so I was only risking a couple of ticks. And then when it came down again, the other markets were breaking that significant swing low, so that's when I went to break even, and that's what happened. It pushed through and ended up just holding and then going higher, but still it was only a break even trade, that reversal there. So that was the reversal trade. From there, another momentum trade. So what we're looking for is to come through. It's looking a bit congested here, but as long as you're very aware of your key areas or aware of your system, it all makes a lot of sense. From here we pushed up 8 ticks past this area. Okay, so I want to, here it is here. So the significant area is this line here, 78.50. So we've pushed up 8 ticks past it, looking for it to come down and touch here and get the momentum trade right there. So it's just come 1 tick short, so no fill there unfortunately. It's then gone up, come back, would have been filled and then eventually would have worked later on, but what happens is I don't sit there and take the order again if it's already gone the distance. So this one here, if it would have been filled, it would have went 8, 9 ticks, so it should be at least a break-even trade anyway. So I don't want to sit here and potentially take a loser when the trade should have already been at least break-even. So if you're in a situation where you can only do worse than what you could possibly gain, then I don't take the entry again, just for this particular area. So that was a momentum trade there, just missed out on a fill. From there we're pushing through, still we're in this congested area. And again another momentum trade here, so we've pushed on. The area is still valid, we've got an actual 5-minute fade coming up here. The room looked at this particular area. For me, again, I've got to buy off the support line. So again, on the 1-minute chart, here it is, looking for it here. So it just missed before going higher. But it's moved on, so even though it's the same area, we've moved on. So I am prepared to take it a second time even when we move on, because even if I had got a winner back here, I would have taken on the area again. Sometimes to do that, you can get multiple trades from the same area. So again, another momentum trade, and unfortunately just no fill there. From there, the market really kind of bounced between points. We never got up far enough past this support line or this resistance support line to get any sort of momentum trade or any sort of continuation on the upside. So nothing there. Downside, just watching it again, never really got underneath it as well. And then all of a sudden, this area here, real momentum, market pushed down, got underneath here. So this is actually a breakout trade. The predictive average is crossing down, so it's a fairly quick one. But just to resort to the 1-minute chart, where are we? So here it is here. So again, using the same price, looking for it to push through, pop back, and then get a continuation. And this one again, just really thought the downside had a lot of potential, and just thought again, looking for this 72 figure, and the market's going to break down through that, and big reward to risk, and that was the reason for taking the trade, because there was actually a significant support level too. So I'm looking for it to pop back and sell here, and there's also another significant support level here. So after going back through the trade, I counted as a loser, no doubt about that. I'm not going to go back on that, but in hindsight, looking at it, I probably should have really waited till it got under this level here, because this is a line that's got underneath it and then it's acting as resistance, but there's another support line just below it, so I really want to see it push through that and then use that as resistance if I wanted to be a little bit more safer there. Anyway, always learning and evolving with systems. So that's the setup. So 2 break-evens and a loss and a couple of missed opportunities, just didn't get the fill according to my system, so that's fine. But the point I wanted to make is just really not experimenting, but looking at and gathering a lot of information as far as exits and creating a risk model. Of course, this is what trading is all about. At the end of the day, entries is not everything. Reading this book talks about how there's basically 10 areas to trading, and entry to a trade is just one of those, and he actually says that's the least significant area of your trading plan or your trading strategy, which I find really interesting. Certainly starting to see that as far as that should be the case, and really focus on potentially what you get as far as exits and risk models around the outside of it. So collecting all data and even losses and break-even trades, just going, okay, where did it get to, and collecting that information. And at the moment, it's still just going for 10 tick profits. But what I found today, for example, and I've said this before with that trade that went 7 ticks and then popped back. So say for example you're risking 5 ticks, okay, so that means a full stop out, you risk, that's 1R, so that means 1 risk. if I look at taking something out at 5 ticks in the positive, then I'm taking out what I risk, I'm taking that out. So I might look at taking a third of my contracts out or half of my contracts out at 1R, meaning I risk 5 ticks. So as soon as it goes 5 ticks, take something out, and of course I'm looking for it to go 10 ticks, so I'm looking for a 2R gain on a trade. Now, so today is a good example. 2 break-even trades and a loss. One of those losses didn't go anywhere, went about a tick and then just got completely stopped out. So that was a full 5 tick stop out on all contracts. And then 2 other trades actually went 6 ticks and 7 ticks. Sorry, 6 and 5 ticks. Anyways, they went a certain distance, then came out back and ended up being break even. So what I worked out based on today, just as normal, what happened with all my contracts, I worked out on average I lost 4 ticks. I had a 0, a +1 tick, a -5 ticks. That works out to be all up I was down 4 ticks on all my contracts. If I had taken a third of the contracts out at 1R, based on that, it would have averaged out that I lost 1 tick for the day instead of 4. Then if I had taken half my contracts out at 1R, so those break-even trades, a few of those areas where I had that opportunity, would have worked out that I was actually up 1 tick for the day. So you take a situation, 2 break-evens and a loss, but you're looking to take some of the value out of the trade early, would have been actually +1 tick. So that's taking a third of my contracts out at 1R, would have been 1 tick down for the day, on average over the contracts. Taking half my contracts out at 1R, or actually would have been 1 tick up on average. Then of course, just as normal, which is what I'm currently doing, I was actually 4 ticks down for the day. So there's a prime example of just by exact same trades, just looking at the risk model, making a few alterations as far as the best way to approach it, and there's a 5 tick difference. You go from a situation, could it be 4 ticks down, or a situation where 1 tick up. And I'm finding this happens a lot. Obviously, every case is different for every person. I'm not just going to all of a sudden make a major change, but this sort of information is what I want to gain. I'm gathering this information, as much information as possible, so over the months I can go back and look at it and go, well, if I had done this, this is what would have happened, and from there I can make an educated decision on what is best for me, and really leaning towards the situation where I look to take something out as soon as the market goes 1R in my favour. As soon as it goes that distance of what I'm prepared to risk, take something out. And I think that, that has a lot of value. Certainly these markets, when they sometimes can move around quite a bit, and from a psychological point of view as well, you're taking something out quite quickly. That means most trades you're going to be taking something out. I know for myself, like this trade here where it was just a full stop out and barely ever went in my favour. So it didn't even go. I think it got to about +1 tick, and that was the best it ever got to. That situation is very rare. So even though stop outs, they might be half the trades. Of those stop outs, rarely do they just go to a straight to a full stop. Most of the time they'll go a distance and then come back. I know, for example, this area here probably wasn't the best managed trade, and I bought in an area where there was selling right on a support area. So I realised it probably wasn't the best approach, and for that reason it's been stopped out fully. But regardless of that fact, there's certainly some opportunity there as far as risk to reward, and it's an interesting game when you start really looking at the risk model side of things. So anyway, a lot of information there. I'll be back Tuesday.